Welcome everyone. I'm Kristen Radish with Arbor Research and Trading, and this is our roundtable on all things crypto. It's my pleasure to have our commentators today. We have Sam Ryans and Peter Pinkazoff of Arbor Data Science, and joining us is Ryan Grace, head of digital assets at Tasty Trade. Welcome to all of you.
Good to be here, Kristen.
Thanks for being here. I'm going to get started, toss out a couple questions here. Crypto's had some big wins recently. Grayscale won an appeal to convert its Bitcoin trust into an ETF. And Ryan, if we start off with you, what does this mean for other Bitcoin ETFs and crypto-related companies?
Yeah, I think this is a positive for the industry. It's a positive for other ETF applicants. I wouldn't say we're out of the woods just yet. So while Grayscale has won an appeal, it's simply an appeal for the SEC to go back and review the application. Whereas prior to this, it's kind of been rejected without a lot of context or clarity as to why that's the case. Historically, spot Bitcoin ETF applications have been rejected by the SEC really over the last decade, since 2013. And it's centered around this idea that there's nothing yet in place to protect investors from market manipulation. Recently, though, you've seen an approval of a futures ETF. And one of the ways that that was approved was that the provider was able to demonstrate a surveillance agreement with the CME. And I think why the industry has taken issue with the SEC and its rejections here is that the Grayscale Bitcoin Trust and their application to convert that into an ETF is also looking to use the CME as a surveillance partner to prevent that market manipulation. So on one hand, you're approving a futures ETF, and on the other hand, you won't approve a spot ETF where presumably those futures settle to spot. So I think all that said, you have a little bit more clarity now, right? It's maybe an endorsement of the CME as a surveillance partner here. It potentially provides a roadmap for others, the big names, the Fidelities, the BlackRocks of the world. There's a handful of applicants here, but it doesn't mean that we're any closer to an approval. The SEC can appeal this. The SEC can continue to delay. And I think the maximum time period that can pass before they have to provide an answer is about 240 days. So we're still quite a ways away from any ETF approval still, though it is encouraging that the US courts are kind of getting a win for crypto in a sense in what's become really an anti-crypto war here.
Peter, do you have any thoughts on this?
Yeah, I mean, I think Ryan is spot on that it's not necessarily, a win of the war, but it's definitely a battle that is, I think, encouraging. I think there's been a lot of different little battles that have been encouraging. For example, Ripple. I mean, at first, the Supreme Court basically said that Ripple is no longer a security, which opens up just a huge can of worms for how, any company, let alone an ETF or an organization, is going to treat crypto. Is it no longer a security anymore? Which opens up basically, the pie in the sky ideas of what crypto could and might be in, 10, 20, 30 years from now. They've kind of rolled back on that language, which is exactly kind of why, Ryan, I think I'm 100% with you that, the SEC might fight any way they can tooth and nail against the whole crypto space. And even something like PayPal launching their own stablecoin in the last couple months as the CEO kind of exited. There's just a lot of very, small but very encouraging little battles that I think are moving towards what, I think crypto idealists might be looking for. And we have to remember, you look back at something like 1997, 1998, 1999, there's just the golden age of internet prospects. You look at some of these ideas that people had about what the internet will be, and it seemed like so bizarre back then. But 20 years later, here we are, and some of those ideas, while at the time there was no way to execute on anything like that, 20 years later, all that stuff is coming to fruition now. So I do think there's a lot of things we have to take with a grain of salt with regard to technology and how that can be executed now. And crypto is obviously very volatile, but anyway, that's my very kind of brief idea of what Ryan's talking about.
Yeah,
Sam,
and
we'll turn to you next.
I'll just jump in with I don't think that the crypto industry actually really knows what it's getting into with the whole ETF idea, particularly Grayscale. I mean, Grayscale has a 2% fee sitting on top of GBTC. That is going to go to 8 basis points at max overnight if they actually get an ETF in competition. I mean, those fees are going away. So that's it has about $16 billion under management. 2%, that's a $300 million product, right? That is pure cash flow. That very little overhead when it comes to running that type of ETF. So you're talking about that $300 million going to, I don't know, 10, 20 in a very short span of time. So I would say that while it's a win in terms of crypto adoption and call it crypto awareness for the broader public, it is going to be a very big issue for very profitable firms that are going to find themselves in the same situation of you really don't want Fidelity, State Street, you BlackRock, you don't want those three getting into the business overnight because they'll take the fees to zero, or Fidelity might pay you at some point. I mean, it's ridiculous. I mean, Fidelity already has 0 fee ETFs. So this is, I would say, while it's a win in terms of the overall sentiment, it's probably not a business win in terms of profitability. I mean,
I was going to say, you're talking about through the perspective of an asset manager. It's
I mean, the macro.
daunting. Yeah.
The macro perspective on this is, so you're going to have, more people potentially able to buy Bitcoin into a 401k or a portfolio. But what you're going to have is fewer people employed in the crypto asset management space because the fees are just not going to be there. It's just that simple.
I think that's an excellent point, right? You'll see the discount NAV tighten up a little bit here. But to your point, Sam, this is not necessarily a positive for Grayscale charging that 2% fee when margins are going to collapse. And presumably there's going to be a handful that are approved. It wouldn't just be one that's approved. The SEC will essentially approve them all if it approves one.
Exactly. And if I were Grayscale, I would be not appealing any of these rulings and would be lobbying against having any sort of crypto ETF. I mean, that would be what I would do. I would not want a crypto ETF out there.
So what is your long-term outlook for crypto flows?
Yeah, if it's back to me, I mean, long-term outlook for crypto flows, in my opinion, is still generally positive, right? 2021 is a difficult comp when you look at adoption, you look at prices, certainly, and I suppose you can apply that to a lot of asset classes. But where we are today, relative to, let's say, wallet address growth on chain, whether that's Bitcoin or it's Ethereum or it's other blockchain networks, when you look at the growth of users, when you look at the development activity that's been occurring, I mean, there's a slew of metrics that you could use to analyze this. We are not at the peak, and this certainly is cyclical, but we are definitely above where we were, say, just a couple of years ago. When you analyze that rate of adoption globally, it's roughly 1995, 1996 in internet terms. So I think the adoption continues unabated, regardless of price action. Certainly price action on the margin pulls more people into it. Volumes are down significantly. But long term, if you look at what's behind flows, I think there's probably 3 key drivers, and you could separate them into kind of the regulatory or institutional bucket. So whether that's regulatory clarity, which I think would be a huge positive for the industry, and a lot of people tend to think, oh, we don't want regulation in crypto. I think the crypto industry would love a regulatory framework to operate within. It would certainly make it a lot easier than having to guess whether the SEC is going to be knocking on your door, depending on the decisions that you make. Additionally, you can look at those technological drivers, not what gets the headlines, but the amount of development activity. The venture capital investment is certainly down, but the utility and the use cases, the applications that are being built, the advancements that are occurring in terms of just blockchain networks and applications running on those blockchain networks, they continue to grow. No, and I think the third and maybe most important driver here, if we just focus on price action, is the macroeconomic drivers. You know, whether people love this or hate this, this is largely a function of monetary policy. It's very difficult for crypto prices to move higher when Fed funds are 5% and possibly going up. This is something that I think benefits, longer term from stimulus, from quote unquote money printing. And so I think if your view is that the monetary authorities on a global basis are going to continue to stimulate, governments are going to continue to debase their currencies. You have, to some extent, you have demographic headwinds, you have fiscal deficits that rise. I do think there's a place for cryptocurrency, and maybe more specifically Bitcoin, in that environment. So I think that's really the true driver here, is that asset price inflation, which pushes Bitcoin to new highs. Though there's a lot to look at under the surface that I think is encouraging in terms of adoption.
And I'll jump in really quick, because I like the point here. There's a couple of really interesting nuances, and we've done a couple of podcasts about crypto, and I call it the tip of the spear risk asset, right? It is, if you begin to see Bitcoin, Ethereum, some of the more popular, call it deeply traded cryptocurrencies, begin to move, you probably are going to have the broader risk complex move as well, right? So, call it crypto, then NASIs, then S&P, right? That's kind of the rule of thumb. And you tend to have a little bit of call it a rally in rates alongside that. And where I would really get interested in crypto is if you have the Fed pausing, you continue to have some underlying inflation, which, to the point that Ryan just made, is basically one of the reasons that you buy risk assets, right? You buy risk assets because they are theoretically benefiting from debasement of any currency over time, right? So if you're buying an S&P 500 stock, you're thinking that the US government is going to have a 2 to 3% type inflation. That's going to be kind of the baseline for revenue growth, and you're going to drop more than that to the bottom line, right? And so crypto is kind of it doesn't have earnings necessarily. It doesn't have, it's kind of like gold, but without the carry cost. You don't have, so you have that zero level, right? It's a non-dividend paying risk asset. And so it tends to be that real tip of the spear type risk. And if you do have the Fed beginning to pause into 2024, potentially going with a real rate restrictive type regime in which they do the 95-96 dance, and you have interest rates on the short end actually moving lower, crypto gets really interesting real quickly, because you do begin to have that risk appetite come back to markets, and you could begin to see, called the max pessimism of Bitcoin from early 2023 really turn around as the Fed begins to turn around as well.
Yeah, couple points I'll just add. I think, Ryan and Sam, I think the whole debasement argument is not to get too Satoshi on everybody, but yeah, it's 100% of the reason why I think crypto goes up in the long term. Also, you called it the tip of the spear, zero cost carry, Sam. I don't necessarily agree with that, because I think there's a misunderstood risk about crypto, where like when you own it, it's just, what's the risk of you losing your private keys? What I mean? The risk of losing.
I agree.
It's like an unquantifiable little carry cost that's not necessarily in a percentage that it's a 100% risk that it's never, really, that you never pay for, except with something that you think about before you fall asleep every night if you hold a lot of crypto. The debasement argument is 100%. I also think that in any situation where the Fed tightens quickly, or stops raising rates in a quick fashion, especially in a slowing economy, we have to remember that even things like gold, even risk assets, like regardless of where they might be 1 year later, even in COVID, gold dropped like 30%, crypto dropped like 50% during COVID. In 2009, gold dropped 30% before going up like 100% 2 years later. So the execution and dance around something like that could be definitely interesting in any situation where you do have some sort of unforeseen economic situation. I think it's also important to remember that the like Sam, you said, tip of the spear, the beta on Bitcoin relative to risk assets is like 4. So if you see any situation where the market can get hit, the first thing that's going to get hit is crypto in a hard way. But that's when you buy it. You know what I mean?
And I think what's really compelling to me as well here is given those arguments and as much airtime as cryptocurrency tends to get, this is a very small asset class, right? We're talking about something that has a total market cap of maybe a trillion. I think it's probably less than that here today. We have companies in the S&P that are bigger than that, right? There's the digital gold, the gold analog, and I think what, 10, 11 trillion in terms of the estimated market cap of gold globally. So very small asset class, very early. There is a unique opportunity just given the lack of kind of regulatory clarity, the lack of institutional participation here, especially in the US for, for some investors, I suppose, to be able to almost front run those perceived flows if this does play out as we've kind of outlined. And that's what I think is really compelling is some of the embedded asymmetry that you get as a result of that.
So I want to ask you all, and in summary today, what do you think is next on the horizon for crypto? What should we be watching for?
Ryan's gonna take that. Ryan's gonna take somebody else.
I'll speak first. I think I'm going to mirror exactly what Sam said. I think watching, it's just in a 5% Fed funds rate environment, you don't really have acceleration for crypto assets, but in any situation where that starts to look like it's going to slow down, I think that should probably be on the top of everybody's watch list. Like I've seen so many tweets, like people are like, "Oh, I took crypto and Bitcoin off my watch list." It's just like the sentiment is in a downtrend, and it's actually gets more and more interesting as you start to think about different situations in monetary and fiscal policy.
Yeah, I tend to agree. I think what's on the horizon is a dovish shift in monetary policy. And again, it's going to be very difficult for crypto to make new highs or to break out of this range when the dollar is strengthening like it has been, when rates are where they are. I mean, if you look at the correlation to both of those, pretty strong inverse correlation to both, let's say, the 10-year yield and to the dollar index. So I think you need to see that change. And then the things that are kind of happening from more of a technology perspective, they actually matter then. The use cases are a little bit more real. And so I think you will see that over time. And that's probably something to focus on over, let's say, the 5+ year time frame. It'll be the tokenization of real world assets. There's some frameworks that are being developed. I think Bank of America just put out a really interesting piece on this as well. And to me, it makes sense, right? You go from, we had open outcry, pit trading, physical stock certificates to the digital representation or electronic form of those. And this is just, I think, a further evolution of that. And so I think that you'll see that embrace there. There's a lot of improvements that are coming to these blockchain networks. Again, this is really kind of early 90s internet, I think, is the best comparison. And so the technology needs to get better, and you need to have more supportive kind of macroeconomic backdrop for these assets. But those are the two things that I focus on. And certainly, let's not forget regulation. Without a clear regulatory framework here in the US specifically, it's going to be hard for the global industry to advance, right? You'll see pockets of Asia that want this and want to support it. You see London certainly wants to be a hub. But the reality is without the US and maybe US regulatory harmony on a global basis, you're not going to see much move from here.
And I'll just add that I do think that one of the best things that happened for crypto was the last year and a half, right? I think it was great. It took out a lot of the froth, fraud, and stupidity, the Fs, from the industry that needed to happen, right? You needed that type of washout in order to be able to actually have real innovation and not fraud. And I think as you begin to move forward, it's probably going to be, it's going to be less sexy than a $30 billion valuation on FTX, but it's going to be real valuations on real solutions to real issues over time. And so I think that it's really underrated how important it was to get the washout. That was an incredibly important development. On the other side, I think it's really important to watch how firms in crypto make money, not just on crypto. Texas has a huge grid problem, and when Texas has issues, Riot, I believe it's Riot, shuts down its Bitcoin mining so they can push power back to the grid. And that is incredibly important. And it actually made more money not mining Bitcoin than it did mining Bitcoin in the last quarter. So I think it's really important to not only look at what's going on within the cryptocurrency industry itself, but also what the peripherals are and how to exploit those in different environments. Because I think there's an awful lot of money left on the table by individuals saying, well, it's just crypto, I'm going to ignore it. Well, if you have a really hot summer in Texas, it's a really interesting investment opportunity to go into a crypto company that can basically make money not doing anything. So I think really paying attention to the peripheral and non-crypto side of things for crypto companies can also be a really important part of thinking about how to make money in the space.
I want to thank all of you for joining us today, Sam, Ryan, Peter. We appreciate all your thoughts and commentary. And if anyone has any questions at all on Arbor Research and Trading, you can contact us by emailing Gus Handler at gus.handler@arborresearch.com. Thanks again to everyone and have a great day.